In this video, traders, we're going to look at if you're losing money in trading, avoid this very damaging thought that many people default to when they're losing. Hey guys, warm welcome to you. So, this one thing is a commonality amongst nearly every single trader who has gone through a losing period, or any trader who has started out and kind of not got the results they want straight away, which is pretty much every trader, right? We all kind of lose money in the beginning and go, right, pull myself together, sort my stuff out, get a strategy, sort the mindset out, all the things we know we need to do. It's a commonality that runs between everybody. There's one thought process that you think all the time, which is super destructive. And that one thing is getting the money back. It's the one thing that everybody always thinks of, and it ruins the possibility of making the actual money back, which is the irony of it. So you have this scenario, right? Market's coming, oh, this is your equity curve. Okay, you've lost money. Let's say you started out with 10, you're now at 4, right? This is not an unusual scenario for a lot of people out there. Been here myself. Comes down here. What are you thinking? What's the primary thought process that is going through your head every single time you sit in front of the screen, every single time you analyze the market? It is, how do I get myself back to where I was? How do I get to here? That's the thought process that goes through your mind. And so what you're doing is you're framing all of your trades around this. Now, there's nothing wrong with having a target of this. There's nothing wrong, well, let me reframe that. There's nothing wrong with having a target of where you want to be. I would suggest not having back to here, because ultimately what will happen, and you're probably going to nod your head and agree with me on this, is that you do claw it back, but then you get to here and you stop doing what you did to get from here to here, and then you go down again. And this is the cycle that repeats and repeats and repeats. So in reality, we're kind of digressing a bit here. In reality, you should be setting your sights up there and saying, okay, I need to get to here, not back to here, because we get back to here and we stop doing the hard work and the grind and the stuff that we need to do to get to it, and we come down again. But going back to the original point, this is the thought process that is going through every trader's mind, or nearly every trader's mind. In fact, I'd almost hazard a guess that it's every trader's mind. How do I get back to where I was? Even if that was a high, let's say you started off with 5, went to 10, you're now back to 4. You're always thinking about getting back to a level. Because if you think about your trading, you know, especially in the early kind of months and years of trading, you're often in drawdown, you're often off your highs. You know, not at new highs every week, every quarter. You're often off your highs. And there's something to be said about not looking at your kind of trading equity curve regularly, because you are often off highs. So you get this process, but actually you're constantly thinking about how do I get back? And it's super destructive. And let me tell you why, guys. It's super destructive because all your trades are framed around that point of reference. They're framed about getting it back. Whereas reality is that you know your very best trading is very rarely done on getting it back, because your best trading is done when you focus on the process of trading. You know that will then allow you to get it back, in inverted commas, because often you'll look at a trade and you'll say, well, actually, yeah, I'm going to trade this. I'll trade a little bit more size because it'll help me get it back quicker. And so you start to over trade in terms of size. You start to see you want to get it back and you want to get to that journey quicker. So you start to over trade in terms of volume of trades, because you go, oh, look, there's an opportunity, there's an opportunity, there's an opportunity. I need to get it back and I need to trade more and more frequently because I want to get back there as quick as possible and get it back and undo all the damage that's done and forget about this and make it all right. Because that's what's going through your mind. And so every single thing is aligned with what we're trying to avoid as traders. Market might be going in your favor. You've got to trade on. You've got a decent profit in the bank, but it's not at your target. You've got a further extension to look for. So what do? You go, well, I don't want to lose it. It helps me get it back. I'm going to cut that profit. I'm going to bank it. I don't want to see that disappear because I've actually got a little bit back. And so you cut profits early. You might be a trade that's going against you dramatically, and you're like, well, there's no point now. I wanted to get it back. I'm down. I've lost another 1,000. What's the point? You know, I'm way down. It's going to take me ages. I may as well try and hold this thing. And of course, so your frame of reference is all anchored to getting it back. And so you really then struggle to get out of it, and often the cycle is that people will wipe that account out, start again, and then if you notice, then your trading actually becomes slightly better from that beginning, because you're starting again, you're starting afresh. You're not referencing from a point of getting it back because you feel like you've done that, that's gone. I've refreshed the account, I've wiped that one out, I'm starting again, and you reframe the thought process. It's like, well, I must create the process to grow the account. So the point of this video, guys, is that if you're in this situation in drawdown, is to stop thinking about getting back to where you were, get that out of your mind, and make the reference of making another good trade. Going through my process, doing the analysis on myself, doing the analysis on my markets, doing the analysis on my setups, my strategies, whatever I need to do, and forgetting about where you are, just concentrating on executing the right trade with the right and the correct risk management, and then you'll get back to where you were. And one little trick you can do is to not look at your equity curve all the time, not be constantly focused on your current portfolio value. Specifically, if you're a swing trader, and you probably know that as well, you know, the equity curve goes up, it goes down, it goes up, it goes down. If you're constantly looking at that and you're a slave to that, then your trade decision-making process is based on where that position is, which doesn't make any sense. It should be based on it should be based on the trade that you've got at the moment, the pros and the cons of the trade, constant reevaluation at certain points, as opposed to what it is relative to your P&L. Because ultimately a trade could still be a great trade if it's not stopped you out. Does that mean it's a bad trade just because it's drawn down, it's not stopped you out? No. The decision you made was, I want to stay in the trade until this stops. Say you've got 4 or 5 positions that are all above your stop still, they're long, they're drawing down. It's not going to look good on your equity curve, but it's still good trades, or it should be, because you placed a stop in a position where it's not a valid trade. So the trade is still valid, and that shouldn't influence your decision. So point of this video, guys, is to try and remove this destructive thought. There's a few things that kind of come to our mind often when we're trading that don't serve us, but one of them is this: when you're in drawdown and you're losing, avoid this thing of thinking, I need to get it back, I need to get it back, I need to get it back. It doesn't serve you. It's not the best way of approaching stuff. Whatever you're doing, guys, take care, keep your risk managed. I'll see you in the next one. Bye bye.